coming through clearly, and we're going to get started, guys.
Okay, let's get started. Let me get the percussion section here. Drummers, are you ready? It's almost time. 4:30. Here we go. And cue the trumpets. And with that, ladies and gentlemen, please put your hands together and welcome our host and presenter for today. Please welcome Mr. Jared Wesley.
Gee, that was more than I expected, but thank you, Kevin. Appreciate it. We're going to be spending the next hour or so together, guys, and I have a lot of information that I'd like to get through. So a couple quick comments before I get started. I would welcome and appreciate any questions that you have throughout the presentation. I'll try to save 5 or 10 minutes at the end to get to those questions. I have about 50 slides in here. I may have to cut a few out because we're pretty, like I said, tight on time. So if I go through a couple a little quicker than you'd like, I'll try to maybe revisit that towards the end if I feel I have a little extra time. Okay. So without further ado, guys, welcome. Today we're going to talk about trading the open for maximum income, what you need to succeed in the first 90 minutes. My name is Jared Wesley. I've been trading for 9 years now, and recently here at the beginning of the year, I started a new chat room, new venture with Unmol and Jay and myself called LiveTraders.net. And just a quick bit about us. We all have 5-10 years experience in the trading business, and one of the things that we wanted to do was bring a little realism, a little transparency to trading. A lot of chat rooms you go to, you know, they teach a lot of theory, but they don't match the theory with reality. So I trade every day in our Live Traders chat room with my P&L open, with live order execution open every single day. And that's one of kind of our ethos, so to speak, here at Live Traders. So we wanted to kind of just take things down a different path and just be more real and more transparent than most. All right. Before we get started, there's always a friendly disclaimer in here, guys. The main thing you need to know is trading can be risky, guys. It involves risk, and if you're going to do this, be smart. Don't be a fool. Don't put all your eggs in one basket and risk your account. That's a foolish way to do it. So if you're new, please paper trade for a few weeks, a month, learn your platform, learn your system, and then go to real money. Be smart about what it is that you're doing, okay? A quick synopsis of what we're going to do today, guys. We're going to talk a little bit about morning preparation, market bias, creating a gap list, pre-market and early charts. A lot of people don't think to look at pre-market charts, right? You might look at the market pre-market, but what about the stocks you're thinking about trading that day? So we'll talk a little bit about the benefits of pre-market charts, how to use them, a little bit about understanding level 2 and ECNs, and then really at the end, and this is a pretty big chunk, we're going to put it all together, okay? Using real trades that we took from today, from yesterday, from last week, real market preparation from today, from last week. I'm a big believer in showing real stuff that's relatively recent. Now, will I show a historic chart once in a while? Sure, absolutely. But I like to show that this stuff works on a regular daily basis, okay? I commented a little bit about Live Traders, but we have an online live trading room. We have a course that's coming out here in April, May called Professional Trading Strategies. We have a swing newsletter, an options course, and we can be found at LiveTraders.net. If you have any questions, you can email us at info@LiveTraders.net. Our phone number is up there. And we'd also like to give a special thanks to Nanko. They have great professional trading platforms, incredible leverage, very good commission rates, awesome tech support. And if you need to get in touch with those folks, it is nankotrading.com. We use a lot of their products. And we've been very pleased with them so far. So we want to say thanks to those folks as well. And without further ado, guys, I'm going to dig in. And I don't, again, mean to be overly fast when I'm speaking, okay? However, I have a lot of information to get through, all right? So we can revisit some of this stuff a little bit later on, okay? One of the big problems, guys, with traders is a lack of focus. You come into the day and maybe you scan for some ideas before the market opens, and then you have this whole smorgasbord of ideas and 20, 25, 30 of them, and you don't know what to do with them. You may have a couple few that look better than others, but the market opens and all of a sudden your head's on a swivel and You look down and it's 9:45, 10 o'clock, and you're like, shoot, I haven't even taken a trade yet. Missed that one, missed this one, a little late on that one. I'm chasing it now. Well, one of the big concerns about the market open is, well, things happen really fast at that time of the day, okay? At 9:30, 9:35, I mean, things are spready, they're whippy, and they're moving quickly. So if you don't have a plan of action for that time of the day, you're going to get left behind. All right, so what I'm really focused on today specifically, and we trade all day, but we focus a lot on the first 60 to 90 minutes. So if you want to call it 9 o'clock to say 10:30. Why? 9 to 9:30 is market preparation, pre-market preparation. Then 9:30 to 10:30 is heavy trading, okay? So when you want to trade pre-market and when the market opens, you need a proper mindset and morning rituals. You need a focused, consistent routine. Okay, so if you're sick that day, you're not feeling well, just go back to bed. Don't waste your time, don't waste your money, because you're probably going to give it up to the market. All right, this business is no joke, it's serious, and the market doesn't care about you or me, right? It'll eat you up and spit you out. So if you're not feeling well, something's wrong, just like I said, go back to bed. If you're feeling well, like most days, right? You wake up, you turn the platform on, you get in front of your computers, and the first thing you're going to do is formulate a bias. What is the market doing today? Now, a little, I don't want to say word of warning, but when you're trading the first 30 minutes of the market itself, the cues, the spiders is what we typically use, sometimes IWM, becomes a lot less important. Why? Because we're taking a lot of gapping stocks, and those stocks are relatively and generally on their own page, okay? So when a stock is on its own page, it's not as correlated to the market, and that's what we want. Why? Because I don't want to have to worry about what the market's doing. I'll give you an example, all right, and I'll show it to you too. I'm a big believer in that. I don't just tell it, I show it, okay? The market was down almost 300 points today on the Dow. I went long on all 4 trades today, all right? I know Unmal today had a really nice day, and he went long, I think, on 4 of his 5 trades. The market was down 300 points. How is it possible that we can be long on 90% of our trades today, and the market's down 300? Boggles people's minds, because a lot of what we're trading doesn't care about the market. Nonetheless, it is good to know what you think the market might do that day, okay? So you formulate a market bias, review the cues in the SPY, and locate the areas of support and resistance. Now, don't worry, guys. I'm going to show you some slides here as we go through this. Once you've done that and you've marked off those support and resistance points, scan for gaps, okay? Most platforms have a good scanner. I usually use dollar gainers and dollar losers, or sometimes percentage gainers and percentage losers. So again, I'm going to show you this in just a second, but this is what I use. This is the scan that I use each morning to formulate my gap list, okay? You can also look at your daily watch list. Most traders have this, particularly swing traders, core traders, okay? And as well as a carryover list from yesterday. There's always a stock, 2 or 3 perhaps, that were really good the day before, and they're so good you keep them on your list because you might see some continuation follow through the next day, okay? Look at the strong and weak sectors. You can look at the NASDAQ heat map, etc. But this is the general rules that you're going to use to scan, okay, in terms of where you're going to find the ideas. Now, the specific criteria we'll talk about later. You're going to rank these gaps. Once you scan, you're going to rank them into levels. Level 1 being the best, level 2 kind of the middle, and level 3 being the more like backup watches, okay? Once you've done this, you're going to take those gaps, put them on thumbnail charts in order of priority. This is key, in order of priority. The one thing you don't want to do or miss your favorite ideas in the first 15 to 30 minutes of the day, right? Like I said before, too many traders, they miss things because they're just not focused. Once you've put them in order of priority, now you're going to develop a strategy for how you're going to take advantage of those gaps. For example, today, LL and VBLT were my 2 top gappers today. So pre-market, you're thinking, what are the price levels that I'd like to trade LL at? What are the price levels that I'd like to trade VBLT at? So that when the market opens and it happens, you're prepared, you're ready for it, okay? Then check the time of relevant news reports. For example, if you have a natural gas stock, or if you have an oil stock you're looking at and there's an oil report at 10:30, you want to know that, right? If there's a housing report at 10 o'clock and you're looking seriously at Toll Brothers, you probably want to know that there's a housing report at that time, because it's going to fluctuate that stock in a way that maybe it wouldn't normally move, okay? So here's an example, guys, and this is a little bit old. I could have put a newer one in here. As you know, the markets are a little higher than this now. But if you have a flat open, that's what it looks like, right? The market's moving up, it's consolidating, moving up, consolidating. But a day like this, see where the tip of my cursor is here, this little bottoming tail red bar? There's not a great bias on a day like this, because you have some support under you, right? You have the rising MA under you, okay? But above you, you also have a little bit of resistance, okay? So when you look at a day like that, you don't really have a strong market bias, higher or lower. So this is a day you're going to be especially concerned about stocks that are relatively strong and relatively weak. That means stocks that are stronger than the market or stocks that are weaker, because the market's not likely to give a big move in any direction. Whereas over here, you have a gap down under a bottoming tail, under support, okay? And you have room down to this pivot here, say, call it 94. So the market's opening at $96 here, okay? All right? And there's room down to 94. All right. Can you guys see the chart set up? Can you guys see it says daily QQQ here? Most people can see that. Just give me a few yeses. I just want to make sure. So I don't, turn the camera off and turn it back on. Because Joy is saying that, yeah, okay. All right. Just want to make sure. Joy, I would suggest maybe log out and log back in. That may do the trick. All right. So you gap under this area, and now you have room down to 94. You know there's a good chance the market pulls back this day. All right. Now, are we wrong sometimes? Sure. But there's a good chance the market pulls back. So you want to focus, right, probably on stocks that are a little bit weaker than the market. Okay. All right. Wow, that's a pretty big delay there, guys. I asked that question about 40 seconds ago. Holy smokes. So there's about a 40-second delay in my wow. Okay. Now over here, right, over here, you have a gap up over this little resistance point with room back up to, say, $97, give or take. So on a day like this, you're going to have a long bias in the market. So you're going to focus a little bit more on stocks that are relatively strong. Okay, but like it says, due to the nature of trading the open, guys, and using gaps, our market bias is less important than it normally would be later in the day, because we're riding early momentum due to the gap. All right. So a couple minutes ago, I was talking about scanning, right? If you're not a good scanner, you're not going to be a good trader at the open, right? Proper scanning is the key to early success, right? If you're not a good scanner, you'll likely not be a good trader really at any time of the day, but especially at the open. You have to be able to know what you're looking for and then compartmentalize it, right? So you can't find it if you don't know what it is, right? So as I said earlier, okay, dollar gainers, dollar losers, heat map, carryover list, etc., chat room ideas, etc., and so forth. All right. One of the things you want to look for pre-market, guys, when you're scanning is volume. Okay. Generally speaking, now there are exceptions to this. Some early morning stocks, pre-market stocks, have very little volume, a few hundred shares, 1,000 shares, and they still move. However, most of the day's biggest movers also have the biggest pre-market volume. I'm going to repeat myself. Not all, but most of that day's biggest movers have also the biggest pre-market volume. There's already commitment in these stocks before the market even opens. So I'm a big believer, and after I look at my dollar gainers and losers, I also look at how much volume are these stocks doing before the market opens. I'd much rather see a stock printing 200,000-300,000 shares pre-market than 200 or 300 shares pre-market. Okay, stocks with big pre-market volume tend to move more than ones that don't. Okay, doesn't mean we shouldn't look at gaps with lower volume. It just means these are really going to get my attention. Okay, so questions to ask yourself. Okay, well, where is the stock gapping to? Where is it gapping from? Is there some type of shock value? Is it gapping over a red bar, under a green bar? Have you trapped some people? Is the stock gapping way over a resistance area, or is the stock gapping just enough to clear a significant resistance point, right? I want you to think about it this way. The more a stock gaps, the more profit it's taking out of your pocket. If there's a resistance point at $20 and your stock gaps to 24, it's gapping $4 more than it needs to. It only needed to gap to $20, right? Maybe $21. Now it's gapping to 24. Well, it's $3 or $4 taken out of your pocket. So I want stocks, ideally, that are gapping over resistance areas, pivots, consolidation, but I want them to gap just enough, not too much, okay? Does the gap have room? So when a stock gaps, is there another pivot to the left, or is there void? Meaning, is there room for the stock to move? And then last but not least, okay, is the stock showing some type of strength or weakness to the market? If the market's moving higher and your stock gaps down under a green bar, that's a relatively weak stock. It's a lot weaker than the market, okay? So you're going to use a list like this. This happens to be TradeStation on here, but I use Fusion and TradeStation, okay? I know traders that use Logix. I know traders that use Sterling, okay? There's a lot of different platforms out there, but let's take this example. This is a list of pre-market dollar gainers, okay? Notice the list is sorted by dollars. The high on here is $8. The low on here is 98 cents. That's how this list is sorted. The second to top stock on this list is Tiffany, right? It's gapping up $6, which is 7%, 141,000 shares. Now, for a stock like Tiffany that averages less than 1 million shares a day, 141,000 shares pre-market is about, I don't know, 50 times what it normally does. So I'm looking at this thinking, wow, that's a lot of pre-market volume for Tiffany. And you'll notice a lot of these stocks have no volume, right? 0, 0, 0, 55 shares, 50 shares, 0, 300, okay? The stocks with the biggest pre-market volume typically move the most. But it's not just the volume. I need to know what the gap looks like. So this is the daily chart of Tiffany. This red line represents the line in the sand where all the sellers are. Sellers here, sellers here. That little dot right there on the 60 at 94.50 is where the stock is at pre-market. This is pre-market. It's where the stock's at. So notice that line is just above $94. Well, that's right at about 94.50, 94.45. Well, that's exactly where the stock's gapping to, just above the red line. Sweet. It's exactly what I want. A stock that's gapping over multiple pivots, over a red bar, just enough to get the job done. Just enough to get the job done. So this is a top watch for me, right? I'm absolutely going to stare at this thing, okay? Next, what I'm going to do is I'm going to take Tiffany and I'm going to put it on my thumbnail charts. Okay, for me, I have 10 longs. These are novice gaps here, okay? And I have 8 shorts. I'm a little bit more long biased, especially when the market's in a strong stage 2 uptrend, okay? I have a little 2-minute chart of the SPY and the Qs down here, but this is what I'm going to be focused on in the first 30 minutes of the day, all right? My favorite one is going to go here. My second favorite one's going to go here. My third favorite one's going to go here. My fourth favorite one's going to go here. 5th, 6th, 7th, 8th, and so on and so forth. Same with the short side. So TIFF is going to get one of these top 2 spots. And I know that these are my faves, so I'm going to put most of my focus. The further down the list I get, the later I'm going to trade them. Because the worse the gap is, the more confirmation it needs. The more confirmation it needs, the later I'm going to trade it. Make sense? I want to see it trade a little bit longer. Show me your hand first. I'm not willing to go on blind faith and trust you. Show me your hand first, then I'll trade you. These, the gap is so good, I don't need as much confirmation because the gap is confirming for me. So here's an example of a stock that has a very nice gap. See it gapping over a wide range red bar, over a pivot with room up to 22 bucks. Great. Love it. It's going to be one of those top 2 or 3 watches. You have an entry here. It's a 2-minute chart. You have an entry right here, okay? And then you also have a pullback entry right here. $21 by 2090. The stock goes, in this picture, 40 cents, but you can see it eventually went to 21.76, 75-cent move. Okay, but if you don't put it on this watch list, you'll probably miss it. Okay, you'll probably miss it. Here's another example. All right, a stock gapping over a red bar, over a pivot, over another pivot. So if you drew a red line here, you'd be gapping over the red line, nothing above you. That's what we want, nothing above you. This time it took a little longer. This one, we didn't get that early entry. It just literally hit and ran, and then we had to wait. We had to be patient because it triggered too soon almost. But you still got paid, right? Scan, watch, wait, execute. Okay? So that's a little bit of the pre-market preparation. Now we're going to talk a little bit about pre-market charts. Now, guys, I could honestly talk probably 3 hours on this topic, and I only have an hour. So that's one of the reasons I'm going through it a little quick. All right? But pre-market and early charts. Now, why use pre-market charts? Well, a couple of reasons. It's going to help you stay out of stocks that are probably going to pull back at the open. See, a lot of people only look at the gap, and they don't realize that that gap actually is a stock that's been trading for the last hour or so. So even though the market isn't open yet, it's still trading at 8:45, 8:50, 9 o'clock, 9:10, 9:15. That stock might be going straight up. So by the time the market opens, the stock is literally up $4 or $5 straight up. I don't want to buy a stock that just moves straight up $5. So in that case, I'll look at the pre-market chart and say, you know what? If it pulls back, then I'll buy it. But it can do the opposite as well. It can help get you into a stock earlier than it normally would, than you might normally get in. Because maybe you see a really nice gap, and then the pre-market chart has a beautiful pullback or a beautiful consolidation. You say, gosh, if this consolidation holds, I'm going to buy it right at 9:30. Don't worry, don't worry. I'm going to give you some examples. So by getting in earlier, you can better take advantage of the entire move. Okay, so I treat pre-market charts, remember, with volume. With volume. I'm not talking about pre-market charts with 1,000 shares, 50, 100, 200,000 shares. I treat them like the regular charts. If it's extended in the pre-market, I wait for a pullback. If it's not extended in the pre-market, I get in right at the market open. Okay, but you still have to trade quality. All right. Don't get too enamored by some of these gaps, all right? And you want to get in immediately. Let the chart make the decision for you, okay? Let the chart make the decision for you. Okay, now, one of the negatives about pre-market charts is sometimes they're not an early indication. Even though you might have a good pre-market chart, when the big volume comes in, sometimes they do something unexpected. Another thing to consider is the first 2-3 minutes of the day, very volatile, very whippy, very active time of the day, okay? So that means you really have to know what you're doing. So for me, guys, if I enter a stock that early in the day, 9:30, 9:31, 9:32, I typically don't take a full lot. I'll take a half lot, 2/3 of a lot. And that allows you a little more flexibility for if you were to take some slippage, okay? But the advantages, guys, they far outweigh the drawbacks. Okay, we're not randomly trading stocks. We're basing them off of technical analysis. We're basing them off of gaps. We're basing them off of intraday patterns. So take a look, for example. Pretty nice gap, right? It's not the greatest gap I've ever seen, but it's pretty nice. It's gapping over this red bar, or not red bar, but this red line, which is sellers. And it has room back to $75, give or take. So it's gapping over this area with room back up to at least 70 to 75. Okay, nice gap, over double top, into void, top watch idea. By 9:32, you've already missed the move, and it was the only move of the day. Unless, okay, and I'll show you what I'm talking about. That's it. I mean, guys, that is this thing pops $2 in the first 5 minutes. It's gone. I mean, this thing is gone. Maybe you could aggressively get in at 66 after it's up $4. That's the 15-minute chart. Pretty tough stock to jump on board. You go back to the daily and you go, gosh, this was a top watch idea. I really liked it. Now, literally a minute, 2 minutes into the day and it's gone. Doesn't have to be, though. There's the pre-market chart of CRE. Consolidating, just grinding up. Look at the moving average. It's just like a magnet. Consolidating. Look at it, right at 63. I mean, this is exactly what I want to see. But hey, most traders don't look at the pre-market chart, so they'd never see this. So literally it just hits 63 and it's gone. I mean, guys, that's a 2-minute chart, and there are no entries on this 2-minute chart. None. Maybe you buy the pullback here, maybe. I'm in this thing at $63 the nanosecond the market opens. I'm giving it 25 cents, and I'm making $1,100-$1,200 in literally 2 minutes. I mean, yeah, literally 2 minutes. Now, and I sold this thing early. I only took 35 cents from it. This thing went $7. If you're a patient trader, you could have made this a $10,000 trade, a $5,000 trade. I got in, I got out, and I moved on. Now, I'm not saying that's right or wrong, but what I am saying is without the pre-market chart, you're not catching CRE, and you're definitely not catching CRE at 63 bucks. Guys, it closed the day, 70.09. $7 later. Okay? Here's another example. Nice gap, all right? Over this, sellers, 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 okay? Right? Sellers, 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 stocks gapping up. Now again, this thing just hits and runs, right? Literally, it just hits and runs. I can show it to you. There it is. My point here is that's the pre-market right there. Beautiful. I love this consolidation. Look at the rising moving average, okay? $23, 22.80 is the low of the base. Maybe you want to use 22.70. That's up to you. Soon as the market, you can see the time. This is a 2-minute chart. Look at the time. Soon as the market opens at 23, it's gone. $10, 20, something like that. Gone. That's a 2-minute chart. So where were you going to get in? Maybe here? Maybe. I mean, it did. It would have worked to the tune of 40 cents up here. But the $1.20 move was here. The 40-cent move was here. And you can see the high of the day was 24.50 because it pulled back later. That's the high of the day at 24.50. So you got maybe 40 cents out of this move, but you got $1.20 out of this move. Well, there it is. It's a 4-minute trade. Okay, I'm in. I want you to take a look at the prints just so you know that I'm not BSing you. 9:30 and 7 seconds. I got in this thing 7 seconds into the day. 7 seconds into the day, a quick $1,000 bucks. Move on. Let's go back to the chart. If you didn't catch that, maybe you catch it up here at 23.80 and you get a good move. You do, but you don't get $1.20 out of it. Love that pre-market chart. I'm in at 23 bucks, 7 seconds into the day. Boom, and I'm selling, about halfway up this move. I think I got 23.6 was like the last exit I took. Okay, all because the pre-market chart was really nice. Now, is every pre-market chart going to be that nice? No, right? Not every pre-market chart is going to be that nice. Okay, so as I'm saying here, not all pre-market charts lead to 1 and 2 minute highs. When should I wait? Well, if there's no edge to the pre-market, meaning the pre-market chart is sloppy, wait. If the gap isn't great, which means level 2, level 3 gaps, wait. If the stock is too illiquid, meaning it's just not trading enough shares, wait. Okay. If the spread is too big, we have this problem a lot in the morning. You'll see a stock that's $30 with a 30-cent spread. Can't trade that. Maybe 10 or 15 cents, but not 30 cents, right? So the spread isn't manageable. Wait. Okay. And of course, if the pre-market pattern never triggers, right? If you let's say I want to buy that stock at $23 and it never triggers, you just wait. Why are we waiting? We want more confirmation. Okay, let the stock trade. Let it show us more pictures, right, guys? More confirmation equals more information. More information equals a better decision. More volume. Hey, if it's too illiquid, I can't trade it, right? Maybe you can take a smaller position, but just wait for more volume. The more you wait, usually slightly higher odds. And guys, when I mean wait, I'm talking like 10, 15 minutes. I mean 9:45, 9:50, 10 o'clock. I'm not talking about waiting till noon, all right? 3 to 4 bar plays, guys, are pretty good for these morning momentum moves, okay? Here's another example. You see this gap? Gap is king. Bad gap, no trade. That's the pre-market chart at 32. And a lot of you are going, wow, that's really nice. But the gap isn't. That daily chart is nice. But remember earlier, guys, I said gapping just enough? Well, gapping just enough would be 29 bucks. You see this pivot right here? Gapping to $29 right there. If this gaps to 29 with the same pre-market, I'm taking this at 32. But when a stock gaps from 28 to $33, I need to wait for a pullback. I'm not taking this. Now, granted, it did go 90 cents, right? It did go 90 cents, but I'm not going to buy that at the open. It gapped too much, okay? So when it pulls back, then you can look to trade it later. It never really gave a great entry. Gaps to 29, probably buy it at the open. Here's another example. They don't all have to be breakouts or buy setups. Look at this, guys. This is a trade on DDD, on a climactic reversal buy setup. This is all pre-market, okay? Guys, the stock went from $76 to $54 pre-market. If you didn't have the pre-market, all you see are green bars going straight up. If you didn't see the pre-market, all you would see is green, 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 green going straight up, okay? Entry here is I messed that up on the entry. The entry here is $56.22, something like that, okay? I don't know why that's there, all right? You buy it at $56.20, put your stop down there at like 55-ish, you ride it up. That's a $10 move. Without the pre-market chart, I'm not getting into this early. So the pre-market here is telling me, look, this stock is extended. It's climactic. It's time to get in this. Look at the volume. Look at the green bar. Look at the distance from the MA. Get in, okay? So that's how you use pre-market charts. Now, I'm going to go a little bit quickly over level 2 and ECNs. I only have about really 20 minutes because I want to save 5 or 10 at the end, okay? Big problem, guys. Everybody loves to talk about charts. Let's talk about theory. Let's talk about charts. Just buy it 1 penny above. I've seen so many textbooks out there. Put your order 1 penny above and then manage in between. Wow, that sounds so easy. Well, in a vacuum cleaner, it is, right? But we don't trade in a vacuum cleaner, all right? We trade in the real markets. So that means we deal with spreads. That means we deal with volume. We deal with liquidity. We deal with market makers. That's real trading. So the question is, do you enjoy partial fills? Do you enjoy no fills? Do you enjoy late fills? No, nobody does. Do you enjoy slippage on an exit? Not just an entry, but on an exit. You want to get filled. Maybe you stop out at 21. It fills you at 20.80. You take 20-cent slippage, you lose an extra few $100 for no good reason. Do you enjoy missing targets, especially by pennies, because you couldn't read the level 2 and see where the big seller was? Do you enjoy paying high ECN fees and commission? No. What if you could get better fills, lower your fees? That would be appealing, right? That would be appealing. Because I don't know if traders really understand or appreciate how much money you spend each month and each year on fees. I mean, guys, I've had years where I've spent $40,000 in trade fees. If you could cut that $40,000 down to $20,000, you'd save yourself $1,500 a month just in fees. So the question is, well, what can level 2 do for you, right? Well, it helps us understand where the buyers and sellers are, okay? That's nice to know. I want to know where the buyers are. So if I need to take shares from somebody, they're there on the short side. If I need to buy shares, I want to know where the sellers are too. I need to know where they are so I can kind of get a better entry. It'll show us the spread of a stock. It'll show us how whippy a stock is. It will help us get better fills. Gauge our exit strategy, assuming there might be a large block order. Okay, now, are there games played on level 2? Sure there are. Absolutely. But more often than not, the shares showing are actually there, okay? More often than not, the shares showing are actually there. So basically, guys, by understanding where your competition is, generally makes your trading more efficient and profitable. Basic level 2, I'm going to go over this really quick. This is the level 1 information, the name of the stock, the bid, the ask, the price of the stock, the volume it's trading, okay? The level 2 is going to tell you how many shares are on the bid and the offer, okay? 100 shares, 200 shares, 500. This is a bit of a basic old school level 2. You can see it just by the ECN. This is the ECN route, BATS, ARCA, NYSE, etc. Okay? The bids are here, which are the buyers. The ask is here, which are the sellers, right? So the ask minus the bid is what the spread is, okay? The spread is the difference between the buyers and sellers. Make it simple, okay? The difference between the buyers and sellers. The next slide is easier to see. This is a different style level 2. The buyers are at 1549. They're showing 16,600 shares. The sellers are at 1550. They're showing 279,885 shares. That's a 1 cent spread. Sometimes stocks don't have a 1 penny spread. So the sellers are all the way up here at 1560 and the buyers are all the way down here. So if you want the stock, you're either going to sit and wait at 1549 and wait and wait and wait and wait, okay? Or you're going to pay up to 1560. You have to make a decision. You have to make a decision. What separates you from the rest? This is impressive. Well, thank you for the compliment. What separates me? Nothing. There are better traders out there than me, McCollum, and there are worse traders out there than me. The difference between me and everybody else, or I shouldn't say everybody, that's not fair, me and others, is I show it on a daily basis. I'm not trying to hide behind it. Ask the room. I had back-to-back losing days last week. But it happens. You know, I have back-to-back winning days this week, right? That's the big difference. Okay, McCollum, is everybody wants to pitch you theory. They want to show you in a book only. This is what the book says to do. But nobody wants to talk. I mean, honestly, guys, and again, I can't go off on a tangent here. How often do people actually talk about level 2 in their courses? Not too often. It happens. There are people out there that do it. But most people pitch theory. If you had taken my calls in the room, you would have made blah, blah, blah. This is what I did make. This is what I didn't make. This is what I lost today. That's the difference, okay? I'm not saying that I'm better than anybody. I'm just saying I show it more than most others. But you know what? There are some places out there that do show it, but there's a lot more that don't. So the buyers are at 49, the sellers are at 50, okay? All right. Well, I'm sure there's some people in here from our chat room. You can ask them, or maybe they'll step up and tell you. But we do every day. I'll show you what I made today. I'll show you my live P&L, okay? So I need to move on from this slide because I have so many more to get through in the next 20 minutes, okay? So the difference between the bid and the ask is important. How many shares, the thickness, the depth of the level is very important. Because, guys, if you need 20,000 shares of a stock, but it's only showing 4,900, let's say you want to buy it at 54 and you want 20,000. It's showing 4,900. Well, good luck getting 20,000 shares when it's only showing 4,900. Could there be shares hidden? Sure, but there also might not be. So this shows me that, hey, there are a lot of sellers here, but the buyers are pretty strong too. So when these sellers are gone, there's a good chance the stock goes higher. Why? Because the vast majority of sellers are sitting here, right? So if I can overcome these guys, it proves two things. One, the buyers are strong enough to take you out, and there's not many of you left once I take, right? You take out the biggest guy in the lot, everybody else is easier, okay? Now, again, that I could sit for an hour and just talk about level 2, but a couple other things before we move on from this, okay? You look at a stock here with 19,000 and 800,000. 800,000 on the sell side, 19 on the buy side. Well, now you want to know, geez, how do I get filled on this? Well, how much room should I give this? Well, this stock is very liquid. So at a $55 stock, maybe a hypothetical 15-cent stop loss, I'm going to give it 3 to 5 cents. You put your order maybe 00 to 0304, or 01 to 03. You're going to get filled here, okay? But if this is Google, you're not getting filled with a 3-cent limit, right? You start your order at 01, you end your order at 04. You're basically telling the computer, I'd like to be filled between 55.01 and 55.04. If you can't fill me in that range, I don't want to be filled. But if you're trading Google, you won't get filled, right? It's different for different stocks. So let me show you what I'm talking about. A lot of places, okay, all right, it's the opposite, Joy. A lot of places will put this in their textbook and go, wow, look at this amazing trade. And guys, I'll admit, it's a pretty damn good trade. You're gapping over a pivot. It's got room back to 66. Pretty darn nice, right? Stock comes down, buyers step up, consolidates, test, buyers pass the test. Test again, buyers pass the test. So everybody's saying, hey, buy it at 64.01. That's what every textbook in the world is going to tell you to do. Buy it at 64.01, okay? Put your stop under here. Sounds great. You ready? In theory. Sounds great in theory. You ready for it? Okay. How many shares printed at 01, 02, 03, 04, 05, 06? Look how many printed at 00. 248,000. These are the prints. These are the actual prints. So if you put your order at 01 to say 06, now remember, you're not the only trader in the world that's looking at that chart. How many traders? Thousands of traders are looking at that chart. Well, there's 3,100, 3,700. Geez, I want I'm going to take 3,000 of those shares. I don't know how many you want, but that's just me. And there's only about 2,000, 3,000 more to be had. Wait, let's go back. Gosh, that's a nice chart. Isn't that so beautiful? Come buy my course, take it theory only. Now, I'm not trying to be sarcastic, but I am at the same time. Because you have to know how to enter these things. It moves up, pulls back, moves up. It looks great. But it's only great if you're able to get filled on it. So this is a stock where I'm going to have to buy some at 99 and 00. You don't have a choice here. You just don't. When you look at the spread, you can't see it on this. When you look at the shares at the whole number, when you look at the spread, you don't have a choice but to start this position early. You start it at 01 or 02, you're just not getting filled. Maybe you catch a couple hundred shares of it. And guys, in a minute, it pops like 60-some cents. There, 65 cents. Okay? So you have to be cognizant of those things. All right? Next, what about ECN routes? Nobody talks about these things. SEC fees, ECN routes. Well, everybody's heard of ARCA. Oh, yeah, I know ARCA. Oh, I know BATS. Did you know what they charge to buy or sell 1,000 shares of a stock? $3, right? 30 cents per 100. That's not your commission from your broker. You know, when somebody says, "Oh, I pay 40 per 100," this is separate. This is in addition to that. So there are tons of routes out there. The most actively traded are ARCA, BATS, Direct, EdgeX, NASDAQ, etc. But they don't all cost the same, right? They don't all give rebates. Some of them give higher rebates than others. So again, I don't have as much time to talk about this, but I just put together a little 3-trade scenario on the next slide. Because guys, this stuff is not cheap. It's expensive. You ready? Same trade, 3 scenarios. Same exact trade, 3 different scenarios. So you enter your trade with a stop limit using ARCA. You exit using ARCA, okay? Market order. You just hit market, thank you, I'm done. So you pay $3 to get in. It's based on 1,000 shares, guys. It's based on 1,000 shares. You pay $3 to get in. That's pretty normal. And you hit market. So you paid $3. Cost you $6. $3 to get in, $3 to get out. Okay? Guys, these are not commissions. These are just ECN fees. You enter using a stop limit on ARCA. Same entry. But now you exit using a limit, not a market order. You use a limit order. You get a credit for that. ARCA pays 21 cents per 100 shares. You hit market, ARCA takes 30 cents per 100 shares. I'm going to repeat that. You hit market, ARCA takes 30 cents per 100, $3 per 1,000. You add liquidity, ARCA pays you 21 cents per 100. So now you get a credit. So now it costs you 90 cents. $6, 90 cents, exact same trade. Exact same trade. One costs $5.10 more. Do that 20 times a month. It's an extra $100. Do that every month. It's $1,200 a year. And that's for small-time traders. All right? Now, scenario 3, use a different route like TRIM. Okay, now, is TRIM as liquid as ARCA? No. Can you use that on every trade? Probably not. But TRIM is also half the price of ARCA on entry. Exit using a limit. Get a credit. Oh my gosh, they paid me 60 cents to take that trade. Now, not every brokerage has this. For example, TradeStation, which I use TradeStation as well. That's a little bit of a different scenario. But if you're on, a Logix or a Sterling or a Fusion or a Lightspeed, etc., these apply to you. And a lot of other platforms as well, by the way. Okay? Here, you pay 6. Here, you pay 90 cents. Here, they pay you. They pay you. Now, granted, not every trade's going to hit target. Half of them might stop out and you're going to end up paying, that $6 anyway. But the point is you can save thousands and thousands of dollars per year by understanding what these ECNs are and how much they cost, what they charge. It's astonishing to me that traders, a lot of them don't know this. And guys, there's another quick thing. I don't have time to discuss it. I just want to throw it out there. There's an SEC fee, right? Section 31 fee. It's based off a dollar value of the position. It's more expensive the higher price stock you trade. So if you spent $500,000 buying 1,000 shares of Google, versus, you know, $5,000 buying, you know, 1,000 shares of $5, you're going to pay a higher SEC Section 31 fee. Now, again, I don't have time to get into that. You can look into it if you like, okay? Trade fees and commissions, guys, are a very big deal. Very, very big deal. So for the next 10 minutes, guys, I'm going to go over about 15 slides, okay? Then we're going to wrap this up. I may end up going 2 or 3 minutes over, but I'll do my very, very best to stay on track. We're going to put everything I talked about together, okay? We're going to start with a nice gap, a level 1 gap, has shock value, gaps over pivots, void, not too excessive. Hopefully it's got strength to the market or weakness to the market, but it's different than the market. Heavy pre-market volume, nice pre-market chart, buy set up, a 3-bar play, a climactic reversal. We're going to watch the level 2 that we just talked about, see where the buyers and sellers are, where the liquidity is. Or I want to see big volume at my intended entry price, okay? Watch the balance of power shift between the buyers and sellers. 100,000 on the sell side, 20,000 on the buy side. Well, then all of a sudden the sell side goes to 50,000 and then the buy side goes to 40,000. That balance of power is shifting. It's about to break. Guys, I teach a whole course just on level 2. We're actually going to add that to our professional trading strategies course. We're going to make one overall course that covers everything. Then you enter at your predetermined price. So it looks like this. Looks like this. You saw this earlier. You gain your market bias, okay? Then the next thing you do when you gain your market bias, you scan, okay? POWR on the daily. Oh, look at that, right? Scan dollar gainers, percentage gainers. There it is. Okay, so what do I do with it? I go, wow, look at that. It's gapping over 2 red bars and gapping over this pivot just enough. 2 red bars over this pivot. It's got all this room to go, all this area to go. This is top watch, okay? Top watch. Sometimes I don't check every day, Bones, but sometimes it's nice to know if there's a huge short interest, right? Because then when they start covering, oh my goodness, do they just explode, right? But I don't typically check. Usually somebody in the room will comment on it, though. So now I know this stock's got room to 18. Do I expect it to go to 18? No, but I know it's got room to 18. Love it. Over a double pivot top, over red bars, great. What am I going to do with it? I'm going to take it, and I'm going to put it into my number 1 slot, right? Number 1 slot right there, okay? Instead of Tesla, POWR gets my number 1 slot. Then I'm going to look at the pre-market chart and the pre-market level 2. That's the pre-market chart. How sweet is that, right? And let's go back for a second. So this thing's doing 67,000 shares. This is a stock that normally does nothing, doing 67,000. That's a lot for this stock. Sweet. So now, pre-market consolidation. Wow, that's pretty sweet. $9. That's the pre-market prints. Okay, nice. Look how much it's printing, right? As we get closer to the market open, more and more shares printing. At 9:30, look at it. Right by 9:31, it's already triggered. Boom. Look at it, guys. It's already triggered, and then it's gone, right? That's how it looks. Beautiful daily chart. Beautiful pre-market. Buy at $9. Put your stop at 880. It goes, what's this, a 5-minute chart, I think? Yeah. 20 minutes, you're up 80 cents, and you're done for the day. Okay. If you didn't take that 1-minute high entry right there, over 9, there were no other entries for the rest of the day on this thing. That's the pre-market chart. Love that little shakeout right there. Love it. Buy it as soon as the market opens. Okay. Now, somebody asked me about today, so I'm going to show. Oh, they were on that side. Sorry. This is today. I'm going to repeat myself. This is today. Okay. Today. All right. 325.15. VBLT. This was somewhere. This is a dollar gainers list. Okay. Now, unfortunately, I took this picture later in the day. I apologize. I took the picture later in the day. But we have a stock that's gapping up over this 60-minute chart. See it right there? We're gapping above this consolidation. You see this 3-bar consolidation. Now, note, it's got room back to $14. Okay. That's yesterday, the day before, the day before. Okay. Gaps above this area, guys, it has room to $14. This is a top watch, okay? So this is my actual list, all right? No, I didn't doctor this up, okay? This is the actual list. LL was my top watch. VBLT was my second favorite. GIS was my third. WWAV, MXIM, MDLZ. They were my top 6 watches today. Okay. Can you guys still see the presentation? I hope you can still see it. I haven't done anything. It's still there. I just want to make sure. Okay. All right. Good. All right. So top watch. VBLT is actually number 2. Beautiful daily. All right. Hold on. Now, guys, it's in my 2-minute thumbnail watch list. I'm not going to miss it. All right. You ready? Boom. First and foremost, I want you to note the time, 9:02 a.m. This is the list this is a screenshot of our room today, okay? Longs, LL, LXK, GPro, oh, VBLT. Look at Unmall, VBLT. Note, Jared Wesley, favorite longs, LL, VBLT, GIS, MXI, 9:22 before the market opens, okay? Very, very clear. 9:02, it's on my list. Unmall, 9:08, it's on his list. It's on my favorites list. There's the call. 9:41, small risk, 643 by low of the day, 9:45, 663 by 639. Hold on. There's the trade. Hello. 916, this is today, okay? Trade. Real P&L. This is Jay's trade on this today. Unmall took this as well. I took it as well. I actually didn't make money on this day. Unmall didn't. Jay did. There's the daily. There's a pullback entry. There's another pullback entry. There are 2 entries on this stock today. Okay. Now, anybody here that's in the room can tell me that this trade wasn't called today, because they can't, because it was called, right? That's today. That's exactly what happened today on VBLT. That's the morning list. That's the thumbnail watch list. That's the call. That's the pre-market list. That's one of the trades on this. One of the trades. All right. So we do this every day, guys. All right. Here's a beautiful gap right here. Gapping over a consolidation. Wide bar, couple consolidation bars, gone. $1,300 in 2 minutes. There's the P&L. I got to go through these quick because I have about 10 more to get through in about 3 minutes. Okay. Gapping over this area right here, okay? Gapping over that area, wide bar, consolidation bar, gone. $4,000. The trade I took, this is actually kind of old. 60 minutes, $4,000, okay? Not every trade's a monster. Here's another gap, but note, gapping over this area, you don't have as much room, $24. So you only had about 50 cents in this thing. So your target is right there. I just didn't have that much room in it. Was I wrong in terms of how far it went? Yes. The target was the double top at 24, but it went $1.50, $2, $2.50 actually. I didn't know that. I didn't think it would go that far because the resistance is here. So I got out at 23.90, pretty darn close to where I thought it would stop. It just kept on going. Okay. Here's a trade that Unmall took. Guys, there's 3 of us in the room. Myself, Jay, and Unmall. I'm showing trades from all of us. Okay. This is a week back or so. Beautiful gap over this pivot, wide bar, narrow bar, gone, $880. Pretty quick, and you could have even added to the position right here, okay? Here's another trade on LL a couple weeks back. Nice climactic move from, guys, 70 down to $30. That's insane on lumber liquidators. Bounced back up. Beautiful pullback right here. Get in roughly 34.05, $1,014. Risk 300 to make 1,000. That's 3-to-1. There's the prints, right? You can even see the account statement, 34.05 by 36.79. Okay, these are real trades that are taken for the room. Okay, here's a real nice one that Unmall took, 10 days ago or so. You guys remember FXCM? This stock got killed. 16 down to 2. Nice gap up right there. Right there. Little bit of a choppier pullback, but that bottoming tail suggested buyers were stepping up at the 240 area. He gets in at 246, 247, puts the stop at 241, $2,100 later, and you could have even added. Could have gone up, pulled back, and added some right here. Gone. Okay, 246 by 273. I have to say, that's pretty fortunate to get the high of the day. That's pretty fortunate because we don't usually get the high of the day on our trades. So tip my cap to Unmall. Guys, some days I'm going to use the pre-market chart to get into a trade. And some days the pre-market chart like this isn't going to help me. So here is a good example of HPQ on a pre-market chart. Look how beautiful that consolidation is at $28. So I buy it right at the market open, literally at the market open. Put your stop under here, 27.80, ride it up. On the CF trade, I didn't have a beautiful pre-market chart, so I had to wait. So this is a 9:30 trade. This is a 9:38 trade. Okay, we're still done by 9:45, right? CF is the last trade you took, right? 1,300 on CF, 900 on HPQ. It's $2,300, $2,400 day. And then this is today for the room, okay? There's Unmol, there's Jay, and there's me. I was the laggard today. I was a big baby. I didn't do well in BBLT. Had a nice trade on MDLZ, and then the LLNG Pro, whatever, right? It just didn't work out. That's all three of us today. That's Unmol's P&L today. CMCSA was an awesome trade. He took VBLT, a quick 800, APOL nice, and WWAV break even. Jay had that 749. He took this, and then he lost on a trade a little bit later on, but still a decent day. Guys, we do this every day. Are they green every day? No. I have red days too. Okay, I have red days too. Okay, so you don't need a lot of money to make a lot of money, guys, in trading. All right, I've shown this in the past before, but I've turned $2,000 into $50,000 in a year. I've turned 2,500 into 100,000 in a year. Okay, you don't need huge accounts to make a lot of money. Now, is that hard to do? Would I recommend starting an account with $2,000? No. You know, if you're going to take a prop account, I'd put 10 grand in it, 5, 10 grand. A retail account, 50, maybe 100 if you can sniff it. Okay, but you don't need a lot to make a lot. And you can see here, you know, Unmol does very well, and he doesn't have a $100,000 prop account, nor do I. Okay, yeah, well, it is what it is, right? So I'm going to finish this up, and then I'm going to open it up for 3 or 4 minutes of questions. I will say this, there is about a 20-second lag, 30-second lag for whatever reason when people ask questions. So start asking them now, and then I'll by the time I'm done explaining this, then I'll be ready. LTCR, livetraders.net chat room. It's typically $127 a month. We're offering it for $97 a month through the end of this month, guys, for the folks that are here today, okay? You can email us at info@livetraders.net. Our phone number is here. This is a link. You're going to have to copy and paste that somehow. I apologize. Maybe Unmol can put that in the room. I'm not a Superman, McCollum. I am absolutely not a Superman. There are traders that make way more money than I do. We have some in our room. I know a trader that's in our room that makes 7 figures a year. I'm not even close to that. So, you know, I'm not. This is just trying to be much more realistic and transparent with people, plain and simple. Okay. Some symbols, yeah, you know why they were repeated? That's funny you caught that, PK. Good for you. I'll go back right here because I had extra space, so I put them twice. Does that make sense? Normally, I fill all this up with ideas. Does that make sense? Normally, I fill this up to the end, but I had 1 or 2 in here, you know, repeated. That's the only reason. I had extra slots, and I said, whatever, I'll just throw those in. And guys, I want to throw out a special thanks to Nanko. We don't give free trials, Rob. If you'd like to take a trial, they're $29 for a week. Okay, you can stop by our website. We do not give free trials. Okay, I was at a company before that gave free trials, and people just milk it and abuse it. And if you're serious and you want to stop by, $29 is nothing. And if not, that's fine too. Okay, we look at it both ways. But I've been in this business too long to see how traders really are. So that's it in that respect. But I want to give a special thanks to Nanko for inviting us to this, as well as online traders. And if you have questions about opening a prop account or that type of account, or about the Logix or Sterling platform or the commissions, etc., you know, please contact Nanko. We work with them as well. We can get special discounts from them, so you can ask Unmol about that as well. All right. Let's see. No, Bob? You know what? You're right. I didn't show any shorts in here, did I? You're right. I didn't show a single one. I apologize, Bob. But you're right. How much buying power did I use for the 100K, PK? 50 to 1. So that was 100,000 in buying power. And obviously, as the account grew, I mean, I have over $1 million in buying power now. But it's, guys, let me say this very clearly. And I want to be very clear. And I have to end this in a minute, okay? you're not risking $500 per trade with $2,000 in your account. What you're going to do is risk $50 a trade, $20 a trade. You're going to build the account to $3 grand, $4 grand, $5 grand, 10 grand. Once you get to 10 grand, then you start risking 100 or 200 trade. Once you get to 20 grand, then you start risking 300 or 400. Your buying power increases, your risk level increases. This is back weighted. The first 4 months are just getting from 2 to 5, and then 5 to 10, and then the last 6 months, boom, 5 to 50. Right? That's what happens. Okay. All right. So let me go to slide 7 and 8, and then I got to end this. Okay, real quick. Slide 7. Take a quick screenshot because I'm going to move on quickly. If you want, guys, more buying power, or you want to trade without pattern day trading rules, you can email us at info@livetraders.net. Okay. So if you want to learn more about prop trading, if you want to learn more about live traders, please contact us at info@livetraders.net. Okay, there's our phone number. I want to say a quick thank you for you guys. I have to let the next presenter come on now, but thank you very much, guys, for spending the time. And if you have any questions, I'll throw my email in real quick. Give me 1 second to type this in. If you have any specific questions for me, please don't hesitate, guys. We're an open book here at Live Traders. And that's the difference between us and most others. Do most brokers have pre-market data and volume? Yes, Bob, they do. All right. So again, thank you guys very much. I appreciate the time, and I'm going to hand it over to the next presenter. So again, thank you guys very much, and I'll see you in the future.